Welcome back. In the previous session, we looked at the first two sections of the growth plan. These were marketing and sales and production sections. We also looked how Namita approached these two sections for the growth of her traveling beauty parlor business. In this session, we will complete the discussion of the growth plan by looking at people and financial sections. We will also look at the next steps Namita must take to begin the execution of the growth strategy. We will start with the people section. Here's the first question, which is about additional roles. Growth strategies often require businesses to have additional people for sales and production activities. In Namita's business, the main driver of growth is the increase in pricing, not an increase in the number of employees and not on defining new roles. Namita's increased revenues will come about by charging higher prices based on better service and providing more styles. No new role will be created. The next question is about salaries for the additional roles. As we just discussed, there are no additional roles being created. This means there is no need to plan for salary related costs. Similarly, for each of the next three questions, there are no additional planning or arrangements that are needed in Namita's business as there are no new roles. In Namita's business, the growth strategy is not depending on the increase in number of customers. This means that there will be no additional people needed for sales or production. Both Namita and her assistant will be able to provide the services required. As a result, there is no reason to set a leave policy for a new role. Nor will there be any changes in the people plan. Since there is no new person being recruited, there is no need to provide any additional training. Yes, Namita will herself be trained on new makeup styles, and that training is essential to provide new makeup styles and to charge a higher price from customers. But that training is for an existing role, for the role of the main worker. We have discussed the 5 questions related to the people sub-plan. Now, let us have a look at the financial of the growth plan. This also has 5 questions and we will follow the same process that we followed for the previous sections. The first question is about the revised break-even. Growth strategies focus on increasing revenues, and this often leads to changes in direct and indirect costs of the business. Hence, it becomes very important for the entrepreneur to not lose focus of profits while trying to get higher revenues. For Namita's business, the number of customers that she must service at the higher price she wants to charge is much lesser than the customers she is already attending to at present. For this reason, Namita feels she should be able to service the number of customers required to achieve the break-even volume. Let's look at the next question of the section, which is about capital. Growing revenues often require additional assets in the business. This needs additional fixed capital. Higher direct and indirect costs usually lead to higher working capital. The purpose behind this question is to ensure that the entrepreneur is fully aware of how much extra capital she will need to grow the business. In Namita's case, there is no new equipment that needs to be purchased. However, more money is needed for the training Namita will take, which means there will be changes in the fixed capital needed to run the business, all because of the training costs. For the working capital, we realize that the revenues for Namita's business will reduce in the month she has her training. But we also know that Namita is willing to have a lesser salary in that month. By deciding to take a temporary salary cut for that month, Namita ensures that there is no additional funding required to have the necessary working capital to run her business. The third question is about the sources of additional capital. To help the business grow, an entrepreneur can either spend money from her own pocket, which is equity, or take a loan. Namita, the owner, decides to fund the additional fixed capital needs out of her own pocket. This means she is putting in owner's equity into the business. The fourth question talks about forecasted financials. This question in the growth plan ensures that the entrepreneur is able to visualize the impact of the growth strategy on all three financial statements of the business. An entrepreneur should not just focus on revenues, but also on other aspects of financial health of the business, such as costs, cash flows, profits and profitability, and net worth. Here we can see the forecasted P&L, which shows the forecasted revenues, the associated costs and the net profits along with profitability. When compared to the revenues, costs and profits that Namita's business has had in the past, the projected new revenues and profits are much more after adopting the growth strategy. After looking at the forecasted P&L, let's look at the forecasted cash flow statement. We can see that the business is accumulating cash and has a significantly higher cash balance at the end of the year. This increase is mainly due to higher forecasted cash revenues, which is a healthy sign. The other aspect to note is that the forecasted revenues are projected to grow much larger than the increase in costs. This is why the cash balance increases at the end of the year. Finally, we can see Namita's forecasted balance sheet. The cash in the business and the bank balance has grown because of the increased revenues. There is an increase in the forecasted net worth compared to the current value. Most of this is coming through an increase in cash and bank balance, which is very healthy. The owner's equity has also increased because of the costs of the training that were funded out of Namita's own pocket. The final question of the section refers to the financial plan. In Namita's growth plans, there are not many changes. We have seen there is an additional training cost which is funded by the owner's equity. After training, the resulting price increase for improved services is reflected in the increased revenues and profits. There are no other significant actions Namita would want to take for growth, which is why in Namita's business plans, there are no additional updates in the financial plan. We saw that a growth plan is a guide that gives details of what the owners of the business must do to achieve the growth objectives. Once the growth plan is done, an entrepreneur must think about the immediate tasks she must complete. A good way to do that is to start the marketing and sales section, identify tasks needed for it, and then repeat this process for the remaining 3 sections. Having completed all 4 sections of the growth plan, Namita is now ready to list a set of tasks she needs to undertake immediately. Let's look at those tasks now. Namita goes through the 4 sections and comes up with a set of tasks. She thinks about the sequence in which these tasks need to be done. In Namita's case, she realizes that the most important thing is to prepare for the training she will undergo. Namita also realizes that she needs to manage any initial hesitation her customers will have in paying a higher price for the beauty parlor services. To help her manage her customer expectation, Namita plans a list of activities and assigns a date against each task. Namita is then ready to execute the strategy. With this session, we conclude the discussion of the growth strategy of selling products and services to existing customers at higher prices. In the next set of sessions, we will explore different growth strategies.